Let's talk about registration of broker-dealers, agents, investment advisors, and investment advisor representatives. So as you can see, I drew this and typed out this ugly chart that I made that I think kind of details some of this information, this kind of really helpful stuff on kind of like the 63/65, even and the 66. So, especially the 63. So let's get right into it. So a broker dealer, they're going to be the most registered, right? So they're going to basically register always in every state that they have one retail client or an office, right? So a retail client would even be an accredited investor, right? That's not meaning that they're not a retail client. They're always going to register with FINRA. And unless they're a single state broker dealer, they're going to register with the SEC, where, pretty much most broker dealers are not going to follow that single state exception because you can't even trade securities on the national exchange in that case. So they're the most registered folks, right? And again, you can be a sole proprietorship and be a broker dealer. So a broker dealer could be a natural person, which is a person with a pulse or a heartbeat, but it also most likely is going to be an entity. But then an agent of a broker dealer is always going to be like a natural person. Same thing with an advisor versus an investment advisor representative. An investment advisor representative is always going to be a actual human being versus a broker dealer, could be a human being that's a sole prop, but also most likely is going to be an entity. So, broker dealers, they basically what their job is they execute transactions. They'll for their own account or for others, they can do a principal transaction, which is they're going to buy securities for their own supply, charge a markup or mark down, or they can act in an agency capacity, which they're acting as a broker. They're finding two folks together and just charging something from the top, right? Kind of like a real estate agent. So that's broker dealers. Agents, they pretty much have the same rules except for two main exceptions. Number one, they don't register with the SEC because there's no natural person or human being that actually registers with the SEC, right? The other rule is this. Agents are only going to register in the office that they work out of plus the retail client. So meaning, if you're working for a giant broker dealer, they may have an office in like 20 states or half the country. You don't have to register in half the country unless you have one retail client in half the country, right? So that's kind of the main difference between agents and broker dealers. Also, remember the whole rule with snowbirds. So, folks that are on vacation or in college somewhere, it has to do with the residency. Also, let's say if you have a client that moves and, remember there's no de minimis rule with agents. You do have like up to 30 days you can do business with them and then you'd have to kind of register in that new state. But remember your broker dealer would have to register in that new state first. So if it's going to be like a far out state like Montana or Wyoming, you got to make sure the broker dealer is going to register there first, and then you have to register if you want to continue working with that client, right? So and then obviously that doesn't apply to institutions, right? Not institutions. So uh that's kind of mainly the whole thing with the broker dealer agent situation. No, there is some kind of trickery with agents. So agents are exempt for being broker dealers. So if you're broker dealer, you're not going to be the agent, right? It's kind of like two different things. With agents, if generally if you're an agent of like an exempt issuer, like you're selling government bonds to the public, you're not actually considered, you don't have to register as an agent. So if you're working for an exempt issuer, you generally don't have to register as an agent. And then if you're, let's say, an agent, let's say I'm an agent of a company and my job is to sell the company stock to, let's say, just the employees, and I don't get a commission, right? I'm actually exempt from registration. Now, if I do get a commission, I have to register as an agent of the issuer. And additionally, if I sell it to retail, regardless if I get a commission or not, I have to register as an agent, right? So now this is where it gets a little bit funky with banks, right? So many banks they'll also be registered as a broker dealer and they'll have agents that sell other securities. So this is the deal. If you're working for the bank and you're only selling the bank securities, you'd be like an agent of an exempt issuer, so you don't actually have to be registered as an agent. Now, let's say if you're selling other securities now, in addition to your own, now you are an agent of a broker dealer. So it's almost like the analogy I give is if I'm selling my own house, I don't have to be a realtor, or a real estate agent. If I'm selling my neighbor's house, now I do have to be, right? Same thing with like the whole bank. So if I'm working for the bank and selling securities to the public, I'm exempt. But if I'm selling my bank securities and other securities, now I'm no longer exempt. That's the general spiel on like the on the whole agent side. So let's talk about the investment advisor side. So if you're an investment advisor, right, it's not like a broker dealer where you're triple registered. It's going to be an either or situation, kind of like NISMIA, like National Securities Market Improvement Act, where it's federal preempt state. So generally, you're going to have three types. Let's get rid of the exempt ones because that's kind of the wacky one. The exempt one is pretty much if you're advising a venture capital funds, you're going to be exempt from registering at all. All you have to do is file Form 1A of Part 1A of Form ADV, and that's it. And even your employees are going to be exempt, right? The other exception would be if you're advising what's called private funds, like 3C1, 3C7 funds, sort of like smaller hedge funds, VC and private equity funds. If you're advising those in totality, as long as it's less than 150 million of AUM in total, you are considered an exempt reporting advisor, right? So it's either the VCs or less than 150 million of AUM. Now this is like the main distinction, the distinction between SEC covered and state covered IAs, right? So when it comes to an SEC covered IA, you're basically, if you have more than 110 million in AUM, you're going to be SEC covered. If you're between 100 to 110, you can be in between or either or. If you're less than 100, you can be state covered. If you were like federally covered and you drop below 90, that's when you have to become state covered. So now, what is it called? There are certain exceptions. So the main one that you want to know is regardless of AUM, if you're advising an investment company, you're always going to be SEC covered, right? So regardless, doesn't matter if you have like 5 million in AUM, if you're advising an investment company, you're going to be SEC covered. And again, an investment company, they could call it a closed-end fund, an open-end fund, a mutual fund, a face amount certificate, a unit investment trust, an ETF, an interval fund, a business development company. Either of those would all be considered investment companies, right? Not a REIT, REITs are not investment companies. So if you're advising one of those, you're going to be federally covered. Now, there are three rules where you can choose to be either or. So if you're operating in 15 or more states, if you're going to be registered in 15 or more states, you can choose to be SEC covered. Most people are going to do that just for the convenience factor. If you're a pension planner and you're advising pension plans with more than 200 million in AUM, you can choose to be federal with state covered. And the other one is if you can get up to 100 million within 120 days, you can file as a federally covered advisor, right? So this is the deal. When it comes to how pertaining to registration with the state or the administrator, if you are a SEC covered investment advisor, you're not actually registering in any state. Remember, you're either SEC or state. So if you're going to register, if you have an office, let's say I'm a federally covered advisor and I have an office in, New Jersey or North Carolina, whatever, I have to notice file in that state. Basically, I'm just giving notice that I'm doing business in that state. Usually I have to pay a filing fee and give them, a copy of ADV that I presented to the SEC. Now, also, if I have 6 or more retail, so I surpass the de minimis rule, I have to notice file in the state. It's the same rules for state-covered investment advisors, except you register instead of notice file. So if I have an office, I have to register. If I have 6 or more retail, I have to register. Now, when it comes to IARs, right, investment advisor representatives, they only register with the state. Only register with the state. So if I'm an IAR of a state-covered investment advisor, I'm going to register similar to IAs, state-covered IAs, register if there's 6 or more retail or the office. Obviously, I can't register in a state unless my IA is already registered there, similar to like the broker-dealer. And then if you're an IAR of a federally covered investment advisor, this is the tricky one. You only register if you have an office. So regardless of how many retail clients you have in another state, you're only going to register in the office that you work out of, in the office you work out of, right? Similar to like the whole BD. It's not like every office they have, the office you work out of. Same thing with the IR of a state covered IA or agent of a BD. It's the offices you work out of, not every office that they maintain. Also, remember a couple points. If you're an IR of a federally covered IA, the onus is on you to notify the administrator if you leave the company. If you're an IR of a state covered IA, the onus is on the company. If you're an agent of a BD, the onus is on you and the company and the new company. So onus is kind of on everyone, right? That I wanted to mention that. What else? Also, when it comes to, I'll talk about that in another video, but talking about like, you know, custody requirements and for discretionary accounts, like, with surety bonds and all the minimum net capital, net worth stuff. When it comes to broker dealer, like the state can't impose requirements stricter than the SEC. And when it comes to state covered investment advisors, you only have to follow the requirements of your home state, not of any other state. So if you open office in a new state, you only have to follow the requirements of your home state. That's pretty much it. I know this was kind of a lot of information, but just to kind of reiterate, BDs are the most registered. They're going to go with SEC, state, and FINRA. Human beings never register with the SEC, right? So like agents and IRs don't. So agents are going to be state and FINRA. IAs are going to be either exempt, state, or SEC covered. IARs are only going to be with the states, right? And just remember with IAR, federally covered IAs, you only register in the office or offices that you work out of. That's all I got. Please listen for more. Thanks.